On your investing journey, but you find picking individual stocks a little bit too high risk, but equally an all-world ETF is a little bit too steady Eddie for you. You might be in luck because there is actually another option, and that's an investment trust. So what is one? So let's understand ETFs first. So an ETF is effectively a packaged product. It's a shopping basket full of multiple individual companies. Now, some ETFs could have very small amounts of companies. They could specialize in a particular niche, or you could have an ETF that is as broad as the all world. So they will all have varying levels of risk and growth potential. But what most, if not all ETFs do have in common is they remain fairly static. They're a packaged product that's advertised and sold to people to invest into. Some of them do change and rebalance. If you take the all world by Invesco, for example, that tracks the FTSE All World Index. So over time, a couple of times a year, that will be rebalanced. But investment trust is slightly different because that will change frequently because it's being actively managed by a fund manager whose sole purpose in life is to try and beat the market. Now, I talk a lot about the risks of this on this channel. There are very, very few people that will beat the performance of the stock market. But with an investment trust, you're putting your faith in one of those experts that if anyone's going to do it, it's potentially going to be them. Before you start selling your all-world ETF and buying into a fund, just remember there are two big drawbacks. First of all, the fees tend to be substantially higher because obviously if you're potentially going to get more growth potential, those stockbrokers are going to want a bigger chunk of that pie. So you've got to consider that. The other thing is the risk is substantially higher. But there really isn't a right answer to this. There's only the right answer for you and your situation. If you want to try and take a bigger risk and potentially get some bigger returns, then an investment trust might be a good option for you. But equally, if you're a bit of a hands-off investor, you're happy to play it steadily and for the long term, then an all-world ETF is going to be hard to beat. Anyway, let me know in the comments if you've got any questions about investing. And remember, follow JP's budget if you want to get better with money.